Okay, so my name is Alvaro. I'm coming from Colombia. I go to the law school. And as a lawyer, I'm wondering if this treaty is not just another resource for lawyers to work. I mean, we have a treaty. It appears to me that it would generate more controversies, legal controversies, than actual impact in the economy of these countries. And mainly because two things that you mentioned by the end of your presentation. The first being that half of the GDP that is represented in the agreement was already represented in three countries. I mean, the NAFTA already integrated the three biggest economies. And the second reason is that I think that geographically, the countries that are signing the TPP are not close enough to have a real impact. I would like to know do you think that is an issue, or that in spite of the distance geographically that are between the countries signing the treaty, it will have an impact in economic growth of all the economies?
I can only say that the proponents of TPP are estimating very modest economic growth in terms of the U.S. economy. That's the only place where I've seen actual estimates. One study that the administration uses to promote the TPP that was carried out by the International Institute of Economics in Washington, D.C., the Peterson Institute, projects that over the next 15 years, the GDP of the U.S. economy will rise cumulatively a total of 0.5%. That's a rounding error and impossible to project with an agreement this complex. I don't think the distance of the countries will be an issue, not with telecommunications and shipping costs continuing to decline. I think there will be the potential for considerable litigation within the framework of the agreement, and that could prove problematic in terms of the precedents that are set as a result. It is complex. It was negotiated when I say obsessive secrecy, I'm well aware any trade agreement needs a certain amount of secrecy. You can't have all negotiations public. With TPP, it transcended that.
So this issue of the gains from trade is something that I find fascinating. It's something I've been doing research for a while. And so this question about 0.5% gain for the US as a consequence of the TPP, is it big or is it small? Actually, based on the kinds of things I've looked at, I think it's too big. I don't believe it. I think if it was 0.5%, it would be great. It's not
this is cumulative. This isn't annual, it's cumulative.
Yes. Okay. That means that what that means is that in 15 years after the agreement has been fully implemented, US GDP will be 0.5% bigger every year from then on as a consequence of the agreement. That would be amazing. That's not a rounding error. That's huge, but I don't believe it. There's a lot of yeah. I should say I've seen mention of these estimates. There's one by the Peterson Institute. Yes. There's one by the World Bank.
Yes.
They use these CGE models, computable general equilibrium models that have thousands of parameters that we don't know where they come from. Part of what I've been trying to do is to build simple models that are more, I think, credible, and those models suggest the gains are smaller. So 0.5% would be great, but I don't believe it. I think they're smaller. But for me, the opportunity cost of lawyers is not that high. That's a joke, but so if we can get lawyers to come and get together and put and negotiate this agreement, and that increases U.S. GDP and the GDP of other countries by 0.1% of GDP, that's huge. I mean, this is often we're talking about government policy and there's a lot of debate about this and that governments can do. Often those policies have implications for GDP that are even lower, much lower than 0.1% of GDP. So I'll take a 0.1% of GDP anytime.
Thanks. Any other question?
Oh, I have an economics question. I'm not disputing like the importance of labor rights in countries, but couldn't it be argued that like you said how Mexico had a increase in the amount of factory workers from the NAFTA agreements, and couldn't it be argued that like if those jobs were taken up, let's say from like agricultural laborers who had lower wages previously, couldn't the TPP still be a benefit for the country as a whole, since that people are moving from lower paying jobs to higher paying jobs, even if those industrial sectors experience a drop in wages?
You know, there are certain benefits. That's why I said in the case of Mexico, it is a squandered opportunity. Not that there aren't some gains. A job in a new auto factory, if you are coming from an agricultural background in Mexico, would be a significant increase. That's not where most of these workers are coming from, however. But more importantly, a bit of economic history from a U.S. context. In 1913, in the United States, at the Ford Motor Company factory in Michigan, Henry Ford introduced the moving assembly line. Productivity shot up. He doubled the prevailing wage of auto workers. The rest is history. The critics at the time said, this is crazy, it will destroy the industry. What happened is workers who were earning $5 a day bought the Model Ts and other consumer goods that were produced in this factory. The success of the Mexican auto industry, which has been spectacular under NAFTA, is important for Mexico. But 80% of the output of that industry is exported because the purchasing power that would come with the U.S. model of productivity rising during this period and wages rising along with it is absent. Somebody's benefiting hugely as a result of this, but it's not the workers in these factories. It's not the ordinary people in these communities. So auto parts workers in Juarez in Mexico earn $40 a week in some cases. So you've got a situation where labor rights would link producing more to earning more, which sets the basis for stronger economic growth and for expanded trade. Instead, what we have is a trade that does expand, but where there are far more victims than beneficiaries throughout a society.
Just want to say that this issue of labor rights and wages and what Harley was saying about the productivity rising
Yes.
faster than wages is something that is a big puzzle for economists. For a long time, the stylized fact that wages rose at the same level, in the same way as productivity, was considered something that we held as a fact that always had to happen, and we actually wrote models to make sure that the model predicted that wages were rising as fast as productivity, because that's what we saw in the data. And over the last 20 years, that has no longer been the case. Wages have been rising faster on average than productivity, and so the share of GDP going to labor has been falling by around 5 points over the last 20 or 30 years in the US. The latest research I've seen, sort of the best published research on this, is that the main factor behind it is not globalization, but in fact is the decline in the price of investment goods. So the decline in the price of machines has led companies to adopt production methods that emphasize using machines rather than labor, and as a consequence, the share of income that is going to labor has been falling. Now, this has happened at the same time as globalization, so it's very tempting, and in fact, it's very tempting to think that the two things are true. It's happened in the US and Mexico more or less at the same time that they signed NAFTA, so it's very tempting to think that the things are related. But of course, it's not as simple as that. One cannot just say NAFTA happened and this happened to wages, and ergo NAFTA is the cause of that. One would have to think about the counterfactual. Had they not signed the NAFTA, what would have happened in Mexico? Would they be better off? Would labor rights be better? And would those better labor rights and the absence of trade and specialization with the US lead to higher wages, maybe lower wages? So this is just to say I think the key issue behind what's happening to labor is not really NAFTA or trade, but rather the decline in the price of investment goods, which is caused by technological change.
I'd actually like to comment very briefly on that, because I think you're raising some important points here. And I'd like to put it in the context of a specific event that happened in the last month. And you'll get some sense also of the political dimensions in a US context here. Carrier Air Conditioning Company, the largest manufacturer of heating and cooling in the United States, is part of a much larger $50 billion a year conglomerate. They had their flagship plant in Indiana, employing 1,400 people. They're making money in that factory. It's a profitable facility. The plant manager brought the entire workforce together in the last month or so for a surprise announcement. At the end of this year, we are moving this entire facility to Mexico. You've done a great job. It's nothing personal. This is for real. But we will make considerably more at the wage rates in Mexico and the expected productivity. Immediately, that raises the notion that a trade agreement, that is in this case NAFTA, that will absolutely guarantee all dimensions of that investment and corporate treatment in Mexico would be a big lure. Absent that, no company justifiably would be so very quick to move a facility. But it also indicates Carrier is absolutely certain that those wages will not rise anytime soon, because there's not going to be an independent union in that factory. That is an example replicated many times that indicates the difficulty of joining a union freely, which is a fundamental right in any democracy, does not exist in Mexico. And the flip side of that would be, would Carrier be so quick to move if investment were treated in the same manner, essentially saying, yes, please come, we want you here, but your investment has no other legal guarantees than the laws of the country itself versus the provisions of the trade agreement. So in that sense, labor rights become an investment lure in their absence.
Hello, I'm from Peru. My name is Renato. I wanted to ask you about what do you think that how the TPP could affect inequality in the US and also in developing countries like Peru or Colombia or Latin American countries? Because I'm thinking about the implications that the TPP could have in labor markets, and considering the markets that the US has a comparative advantage in and that the Latin American countries have a comparative advantage in. The US mostly have a comparative advantage in like technology and etc. So I'm thinking that the wages of these industries could increase, further increasing inequality in the US, which has been happening in the past. But I'm also thinking about how could the implications or the effects that could we see in labor markets in Latin America affect inequality? do you think that inequality will be reduced in South America or Latin America, and it will be increased in the U.S., or what do you think will happen?
So the standard theory in international trade says exactly what you just said. So if there is trade between a country like the US and a country like Peru, then we would expect inequality to increase in the US and decrease in Peru. So Alvaro remembers Hectorlin theory predicts that. Now, when people looked at inequality rising in the US, wage inequality and the skill premium increasing, skill premium being the wage of college-educated workers over, say, non-college educated workers in the US, that has been rising at the same time as globalization. So it was very natural to think it's Hectorlin in action. But then that would imply that in the other countries the opposite should be happening, and when they went and checked what was happening in Mexico and in other countries, the wage inequality was also increasing. So that implied, well, it's not really Hectorlin. It may still be trade. For example, one idea is that trade helps the most productive firms. Those are the ones that can take advantage of trade opportunities, and they tend to employ more skilled workers. And so when the high productivity firms expand to take advantage of trade, they increase demand for skilled labor, and so that increases the skill premium everywhere. That could be happening. The other thing that could be happening is that as other countries open up, say Peru opens up to the US, they're going to import. They have now the price of investment goods is falling because now they can import them at a lower price because tariffs are declining. And that is then leading firms to use more capital-intensive processes, and that may affect wages and may affect the wages of the unskilled more than the wages of the skilled. So this is just to say there are ways to think about how trade, TPP, NAFTA can increase wage inequality. Offshoring is clearly an important part of it. I would again say most of it is technology. But in the case of inequality, I would say there is good evidence that globalization, again, in particular offshoring, has a lot to do with it.
I'd like to also comment very briefly. I think Andrés raised an important point earlier. Trade is not the only thing that's going on in each of the countries or in their economic relationships. But I think we have seen a rise in inequality in regional trade agreements in all of the countries, which is very problematic. And I think TPP, as currently constructed, should it be ratified, would contribute to exacerbating that. I'd emphasize, I view the development of new factories, new technologies, new research and development in Mexico, in Chile, in Peru, as very important. It's not a zero-sum game, but to realize the benefit for these countries and for the United States and Canada and the other TPP partners, you need to ensure that comparative advantage does not become who has the worst labor rights. That's in no country's interest, although some in the short term could profit very handsomely as a result of that. And I think that's why we are seeing trade as such a tough issue, not simply in the United States, but in other countries around the world as well.
Hi, I'm Camille. I'm from Costa Rica. And my question is if there are any preventative measures that are taking place in these international treaties that would protect exporting countries from an importer's domestic subsidies of specific goods.
So this is like an anti-dumping duty? Is that so? I'm not sure I understood. You're saying if there's something that protects an importer country from an exporter subsidizing their exports?
Yeah, for example, let's say that if the United States, so if there would be a subsidy on fruit, even if there is a free trade agreement where there's fruit imports from Mexico, let's say, how would you protect the Mexican farmers from that domestic subsidy in the United States?
Oh, so this is, sorry, I'm being slow, but this is the U.S. subsidizing its own avocado producers, and that is affecting Mexican exports to the U.S. Is there something in the TPP to deal with that? So there is a chapter in the WTO. I'm saying something else to process it and come up with something, but in the WTO there is a chapter on export subsidies, and it's taken a long time, but it's slowly getting to the point where export subsidies are sort of WTO illegal, and they're decreasing. But you're raising something different. You're raising the possibility that a country is not subsidizing exports, it's subsidizing domestic sales. That is actually that's regulated in the WTO. It's very difficult because so that goes into I don't know the details, but there are some provisions for that in the WTO. I actually don't know. You caught me. I don't know. Had to be a Costa Rican that asked that question. Yeah, I don't know if the TPP does anything. Maybe Harley knows.
You know, I don't know how it would directly impact this, but I have to say what I'm reading from what you're saying is trade law could be a growth opportunity for anyone who wants to study it.
Yeah. How many pages did you say it was?
6,000.
It's not enough. Yeah, we need more.
And I would say the short answer to your question as to how you would address this, with great difficulty.
Thank you so much for your presentations back here. My question is about the legitimacy of TPP. And Professor Shaiken, you were saying that this agreement was, at best, obsessively secretive. And given that all of the countries involved are also, at best, very imperfect representative democracies, what do we make of the fact that there has been almost no accountability, if anything, to the citizens of the countries? It's just been the governments supporting their own agendas or the agendas of the entrepreneurial class in the respective countries. So what do we make of the fact that the vast majority of the citizens that live in the countries of this agreement have had and will have absolutely no say in the process?
I think that's accurate and deeply troubling. In a country such as Vietnam, for example, obviously, given the structure of the government, there was no popular or broader discussion of this. The Vietnamese government committed to major labor reforms that would be very unlike anything the government has done in any area. I think the possibility of those being realized in a meaningful way is virtually zero, given that even in a democracy such as New Zealand, this was signed by the government without much public input in the country at all. If you want a trade agreement that is meaningful, it requires broader popular consultation in each of the countries, and it requires a meaningful sign that these reforms will be undertaken. Absent that, we are likely to see the trade agreement exacerbate the lack of democracy rather than contribute to democratic change in each of the countries. But I think it's a very important, often ignored question.
I would just say first that two things. One is that trade agreements have always been negotiated this way. In fact, there is now some research being done on the release of the rounds of, not the negotiations that are signed and that we know, but the negotiations that take place inside each round, where countries are submitting proposals. And so they're basically saying, if you, they're meeting bilaterally, and they're saying, if you lower that tariff, I will lower this tariff. And they go into certain rooms, and they're doing this rounds of negotiations inside each round. Only now are we learning about the ones that took place in the 40s when the GATT was being negotiated. So those were secret too. And there are good reasons for that secrecy. Because it would be impossible for these kind of negotiations to take place if this is public and is being debated in the press. It would be, the governments could not handle these negotiations. And the other thing is, it's very important to note that there are groups beyond the lobbies of the representatives of corporations that are involved in these negotiations. There are consumer protection groups, there are unions or labor-oriented groups, there are environmental groups. So this issue of secrecy, I'm not saying maybe it is the case that they were more secret than before, but it is the case that they've always been secret. There's a good reason for that, and that doesn't mean that there is no participation of groups beyond the corporations, as it's sometimes, it's made to be seen that way, but that's not the case. There is participation by several other groups.
I think you're raising a very important point. We've always had this secrecy. An important dimension of secrecy is essential when you're negotiating a complex agreement. You may put one offer on the table in relation to something else, etc. This has been at a different level. Of the 1,000 outside advisors that I mentioned, everyone needed a security clearance to be part of this. So in the late stages of the negotiations, if you were a United States Senator, say Dianne Feinstein from California, you could see the text of the agreement, but you had to go to a room in, I believe, the U.S. Trade Representative's office, I can't quite remember where it was, alone, without any electronic equipment, and without anything to write on or any aids. You could look at the documents of a 6,000-page agreement. This is a United States Senator. There were, as Andrés pointed out, other groups involved in this 1,000, this group of 1,000. You did have labor union representatives who were consulted on the labor provisions. They were universally critical of what they saw and wrote a detailed report critiquing what had been negotiated. So in this sense, in all the other areas, the outside experts largely crafted what was presented. In the labor and environment area, there were people that were listed as advisors who had very little influence on what the final language is. That said, there were important gains even in these areas. The language is much better, but the language alone will be fully inadequate. And that leads us to where we are right now, which is an agreement that will be very difficult to ratify and very contentious in terms of the political debate.
You both talked about how there's an inevitability about winners and losers. I got away from that basically there'd be winners and losers in the individual countries, and there'd probably be winning countries and losing countries from the TPP. I was wondering if you guys at this point had any predictions as to who the particular winning countries would be or losing countries. And I know Professor Harley talked about how it's worded right now. There probably will only be winning countries in the short term and not in the long term. So if you had any comments on that.
So I would say the losers, there's a clear group of the losers in general are going to be people that own assets in the sectors that are going to be exposed to competition from the other countries where they are not currently, as the tariffs are not as low, so tariffs are going to be lower, and then you are in a sector and you're going to have to face the competition from a country that is going to take advantage of those lower tariffs. They have a comparative advantage, they have lower costs, and they're going to be selling in your markets at a lower price, and that you're going to be worse off. Owning assets in those sectors means you're a worker who has a job in that sector. Having a job is an asset, because when you lose it, then you have to look for another one. And it takes a while to look for another one, especially if it's a community where there's not that many other jobs being created. Then you may have to lose, and so now you have the problem of having to sell your house, or moving geographically to another place. So that's a big asset to have a job, and you lose that asset. The other owners of assets are owners of capital and specific skills that are specific to that sector. They're going to lose as well. And this is something that has been happening in the US for decades as they compete, especially against China. So those groups, as they are now going to face more competition from countries like Vietnam in some sectors, they are going to experience some losses. I would say maybe in Mexico, Peru, and Chile, workers and firms, owners of capital in sectors like textiles and apparel, sectors where there's big comparative advantage in Vietnam and other countries in the TPP would be the ones that I would imagine would be losing. I don't think there are winner and losing countries. I haven't seen anything like that, and it may be that there are some countries that are gaining more than others. I would have to see, what are the studies on that. But I wouldn't imagine that there are losing countries. It would have to be, the way to think about that would be, the country as a whole is losing, but the government is representing the winners more than the losers. And so even though the country on net is losing, the winners are gaining less than the losers are losing, since the government is not representative of it's not really democratic, and it's just aligned with the winners, then it's making a decision voluntarily that is bad for the country as a whole. That would be the hypothesis. I don't know if that's true. I would be surprised by that.
I think it isn't, I would agree in that it isn't so much an issue of which countries win or lose it. I view the big winners out of the agreement as presently crafted are large transnational corporations, wealthy investors, broadly speaking. There are three highly misleading narratives that inform our understanding of trade agreements, particularly the TPP, that are repeated so often we assume they're true. I would argue it's critical to examine them. The first I opened with the notion that this is free trade versus protectionism, meaning if you're for the TPP, you're for free trade. If you oppose it, you're a protectionist. Donald Trump is a protectionist. Hillary Clinton, Bernie Sanders, and 160 Democratic members of Congress are largely not protectionists. So it's not a question of free trade versus protection. It's managed trade, who wins and who loses. That's, I think, the first critical narrative. The second narrative that's very misleading is, look, trade has winners, most will be winners, and it has some losers. All we have to do is compensate the losers. What is, I think, very problematic about TPP is it's crafted in a way that we will have significantly more losers, to have a smaller group who benefit very much from the provisions of the agreement. So we've got to look at who benefits and who loses in much more detail. It's not simply benefiting the losers after they've lost. You won't be able to make it up. It's ensuring we have far fewer losers. Third, this is about manufacturing. That's so 20th century, if not 19th century. The U.S., in the U.S. context, can no longer compete in this area. Let's let it go. Fundamentally misleading. What would I point to? Germany. Germany has higher wages than the U.S., significantly higher in manufacturing. It is significantly more unionized, and it is doing extremely well as a trading country with a set of policies that promote manufacturing and that ensure a trading relationship that creates more winners. So with all of these things, these are addressable. But to address it, we have to see that this is a flawed agreement and needs to be renegotiated.
Hello. One question. So how do you think, in what ways, if any, will the signing of the TPP will play with the ongoing long-term regional integration in Latin America? So like Mercosur, UNASUR, the Andean community, there are infrastructures that we already have and are trying to develop internally, and how will having a couple of the countries that are in the region participating with the other economies affect that process?
Well, I would say that the big economic event in trade in the hemisphere, in fact in the world, is the U.S. economy. There are regional trade agreements in Latin America that have bypassed that. There are possible gains there, but ultimately, I think a more integrated hemisphere on an equitable basis with a real partnership with the countries involved in terms of crafting an agreement could be in everyone's interest in Latin America and in the United States. That's not what we see now. There's one additional dimension to this. In the later stages of the debate over the TPP, the issue of China has been raised, and the agreement has been argued for on geopolitical terms. The argument is that the U.S. is writing the TPP, China will have to come in on U.S. terms. Therefore, this is critical for the U.S. to show its allies in Asia that we stand behind them. To me, that's a highly flawed argument. My own experience is when geopolitics becomes the central reason for arguing the trade agreement, it generally indicates there may be something wrong with the trade agreement because it should stand on its own. The only way that a trade agreement is going to be lasting is if all the members of it are negotiating it on a more equitable basis. You can bypass it and use your economic power to get something else, but it won't be a lasting agreement and it won't be beneficial in the way that it potentially could be.
I'm just going to apologize that I was looking at my phone. That I'm running admissions for the PhD program, and I think the deadline is at 5 p.m. So I'm getting calls, and I had to see what was going on. I'm sorry. But I think the question is about whether we could have a different trade agreement, one that integrates countries in the American continent. Sorry.
No, not if we can have a new one. Is that in the region we are already having some process, not only of economic but also political and integration, which includes a common currency through Mercosur, UNASUR, the Andean community. So like, how does this play in to have a special club of countries that are also in a different group?
Yeah, that's a good question. I think that, well, there was in the 90s this idea floating around of a trade agreement of the Americas. That didn't go far because partly there was not enough commonality of interest, and just the economics and the politics of it was not in place to go forward. And so what happened is you got these regional, smaller agreements, and there was a big discussion at that time about the problem of preferential trade agreements and the need to have multilateral trade agreements. And there is this risk that in these preferential regional trade agreements, small countries may be pushed by the bigger ones, and some sense that maybe in a multilateral negotiation that wouldn't be as important. And so certainly it would be better if these agreements were more multilateral. There are people that say we shouldn't have these agreements at all. We should just focus on the WTO. The counter-argument to that is, yes, we've tried with Doha, and it's gone nowhere. It's been 16 years since it was launched, and we haven't been able to make progress. And so countries take advantage of the opportunities that come along. And the one that came along is the TPP. And so it's a big one. It's not the best one. It's not the perfect one. It's not one that some people would want, but it's the one that is politically and economically feasible at the moment. And so that's what is on the table.